What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol EAR, E-A-R, for Eargo Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, let's address the elephant in the room here, which is obviously the massive gap down on the catalyst that the Department of Justice was launching a probe into their insurance claims. So fairly nasty in terms of levels of severity when we're dealing with catalysts, right? So as you know, you're here for a price action analysis, and the first thing I want to do is scrunch up the chart a little bit though and just illustrate that this has been in a substantial downtrend for quite some time. So it's not like we were in a nice respectable uptrend and all of a sudden this bad news hit, we gapped down. No, this wasn't looking promising from the get-go. I wanted to get that out of the way here. And in today's video, I want to address this through the lens of anyone who might be long from 20 plus, essentially, right? And whenever we're dealing with a massive gap down, something that's essentially whittled your position size or position in half, right? Basically, this is more than a 50% loss here. Then you need to start thinking about opportunity costs, right? Do you really think it's a likely scenario that we take out today's high and immediately fill the gap back up towards this 2141? I would start to say not really. Again, remembering that we've been in a severe downtrend for quite some time. Of course, there's a bump in the road here, probably just the bottom of this sort of rounded piece in here, close to 20. But again, opportunity cost here. Do you really think that this is going to happen over a short period of time? Probably not. And that's even if it happens in the first place, right? There's no saying if this is going to recover at all. So again, if you've been long from up and over 20, start asking yourself the questions, can I put my money to use in other places that would be more productive than holding on to this? And again, opportunity cost, this might take a year to play out. It might take 2 years to play out. Or the flip side of that coin, which is, even worse, is it may never recover. It may go down to zero. It may get delisted, right? So all things considered, please be extremely careful with this name here. And if you've been long from over 20, start thinking about, okay, where can I potentially cut my losses and just move on, right? Because you're also going to tie up a huge amount of mental capital here, looking at this, day in and day out, hoping and holding on to this thing, waiting for it to potentially come back up if it ever comes back up. So those levels to really watch out for and just make a black and white decision about, in my opinion at least, would be under today's low, 633. I would not want anything to do with this, right? Obviously, there's no structure underneath. There's no saying how low it could go. The next area would be this support trend line. If we come in from the lows of today, do something like this, you can clearly see we're trying to make higher lows. We are making higher highs as well. So as long as this is respected, watch for maybe a grind higher. If that breaks though, again, you have to ask yourself the question, do I want to bail here or do I want to be patient, see if we get a bounce off of this, maybe something like that? I mean, these are all personal questions that you have to ask yourself, but I promise you, taking the loss here and moving on mentally will help substantially than looking at this chart day in and day out for the next however long it takes for this to potentially move higher. And again, if it starts moving lower under today's low, that would be even worse for your mental sort of state and mental health in terms of trading, right? The last thing I'll point out here is the Fibonacci retracements, right? If we take the fibs out, come in from the high of the day, down to the low of the day. Let's say that there's an overreaction bounce into tomorrow's session. If we can start consolidating above the 61.8, then that's the scenario where, okay, maybe I would watch for a near term, in terms of timing at least, breakout up and over the high of the day, right? And of course, as we know, that's up and over 869, starts to fill the gap overhead. If we do get into the gap overhead, please use a trail stop higher. There's no saying where it might turn around and potentially come back down, especially if another piece of news comes out where maybe the Department of Justice is going to be able to put the nail in the coffin, right? So please be careful here inside of EAR. I don't think it's the time to be bottom fishing. If you've been long from somewhere up here, please manage the position accordingly. Again, I can't tell you what to do. I can't tell you to take the loss immediately, but I would not want to be involved in this, and I would swallow that loss underneath 633 if we take it out. And again, I know that's not an easy thing to do. I'm not trying to downplay that, but simply in the long run, I've found that that's been the better thing, at least for me in my personal experience. So if you enjoyed the perspective here today, although probably not a popular one, let me know down below in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I truly wish anyone in this situation the best of luck going forward.